All right. So today we will cover the investment part. So as we have done the protection part, so it's basically so for insurance, it's basically you open an account, and then under the insurance account, you choose the insurance you want. Out of the four, you mix rice fun. You choose whatever you want, you put under the account. After that, you put in money into the account. The money that you put into the account will actually go into investment. So the investment under this insurance account is called investment linked fund. So the operation is very similar to unit trust. So we will basically, you learn this, you will actually also learn unit trust. So you know unit trust, you will learn this very fast. Okay. So how it works is actually there are three parties. Okay. So first parties, we talk about fund manager. So what is this fund manager? Now so imagine we are talking about millions of Malaysian are putting money in Prudential in buying their insurance. So all the money are actually pooled together. So there's a big pool of money that we're talking about billions. So from the billions, we will take a percentage from the billion to hire a fund manager and ask them to invest according to the objective set. So we say, okay, you're going to invest. You're going to choose a long-term one, high dividend one. So you can choose where to give him a specific objective. So we hire fund manager. Okay. So by paying them, because a small percentage from the billion is enough to set up a company basically. So there is a management fee for the whole team. So we say fund manager, but it's not one person. It's basically a team. So there will be fund manager, and also there will be people under the fund manager who gather the data. Okay. So the reason we do that, so the fund manager is professional, they are specialized, and they're resourceful, because we're talking about a team of investment specialists who go and dig all the investments, all the data, and also doing analysis, and also being in Prudential. The information that we get is not just limited to Malaysia Prudential, but Asia. Especially we are very strong in Asia. Yeah. And another benefit for fund manager is it won't be emotional. When we invest our own money, when we lose a deal, then we feel like, no, I want to earn back, something we want to sell. But as a third party, it's very analytical. If the indicators show that you should sell, you sell. So they have to back up by factual reason rather than emotional. I feel like, this investment can go up. So that is the function of hiring a fund manager. And then the second parties, it's unit holders, whereby these are all the policy holder. The policy holder also equal to unit holder. So all these monthly contribution, yearly contributions are gathered together and invest into a big pool. So we have a very big fund size. So later we will go into the details and look at the fund size as well. So with a bigger fund size, of course, we have economy of scale. When you invest, you're talking about placement. You're talking about, you're not buying in the share markets with the brokerage fees. So you invest at a much lower cost. And it's also have a better negotiations. So we'll be like, hey, I want to invest in Maybank. Then Maybank will send someone to the fund house and present their plan instead of insider news kind of thing. So this is the power when you have a bigger pool of money. Yep. So so it basically is the economic skill. It have the big size of the fund. And then we also engage a watchdog, which is called trustee. So it's also from the pool of fund. It takes out only a very small percentage to the trustee, and the trustee the public trustee. We at the moment in Malaysia, we have companies like HSBC, OCBC, they are also a trustee company. So they are professional and they will hold accountable if the fund manager are not invest professionally, are not doing the right things. So we have a watchdog to look after for us on the fund manager, on how it managed the investment. So this is how the investment works, basically these three parties. So we as a policy holder, we invest in fund manager, we utilize, basically I always share is, I'm not a doctor, but I have money, I can actually open clinic and hire doctor to run the clinic. So that is how we leverage on them. Okay. Now, these are the funds, some of the funds where you can just go Google, you just type pooling funds, and you will see all these funds available. It published daily on internet. You can look at what are their performance. Yep, so you can just get it open. There's nothing to hide. You can see their performance. So I picked one of these. Fund for case study. So this is one of the fund. It's called Dragon Peacock Fund. Okay, so let's study some of the figures inside. Dragon Peacock. So of course they name it with meaning. So Dragon Peacock, dragon equal to China, and peacock equal to India. So this fund obviously invests mainly in China and India. Okay, so they will say what is the objective, where they invest. So this is the objective that they define. Okay, so down there you can see it have a breakdown. 50% is in China, 48% is in India. So it's very transparent. It shows you where is the investment, and this info can get public. And then this fund incepted when 2010, 11 January, 11110. So this one, you look at it, the fund size is 1.09 billion. So far, this fund is not the biggest fund size, but there are so many investment in it. So you can basically choose to buy, open an investment account, invest in Dragon Peacock Fund. And then at the same time, you choose to put in the insurance you want in this account. That is investment link account. Okay, let's continue study more. Okay, so we will look, so it shows these are all the companies that currently invested. Some of the company, Tencent is WeChat, the owner of the WeChat. League of Legends, one of the very famous online game. Alibaba Group own Taobao, even Lazada, Tmall. These are owned by Alibaba. And then when it invests in India, so these are the company. Reliance, which is one of the big oil and gas. ICIC is the India bank, kind of like Maybank. So one of the reasons that people invest through investment link is because under normal circumstances, it's not easy for me to invest in all these companies, and also not liquidate, not easy. And then the money have to invest overseas. So I feel like lack of securities. So this would be convenient for people. Okay, so my money actually have a share on this company, so I can invest in this. Yeah. So now we look at performance. Okay, I invest in this company. So what is the performance like? So over here, for this fund, okay, first of all, I have to go back first. This fund is actually as at 2021, 31st October. So this fund data is not updated. Yeah, because this slide is, I don't update it every month. So this is 31st October. Especially right now with the war, with the war now with Russia invading Ukraine, markets has dropped a lot. So this is not current performance. Yeah. Okay. So this fund performance, if you invested, assuming today is 31st October, if you invested 31st October last year, 2020, this fund has basically growth 19.13% if you invested in this fund 1 year ago. And then you say, hey, 1 year only, last year market good ma. Okay, fine. Then let's look at 3 years. If you invested 3 years ago until 31st October, the fund has grown 48.79%. If I divide it by 3, average 1 year 16.26%. Okay, 3 years. No, I'm still not convinced. Okay, then you look at 5 years. 5 years averagely, if 66.08, if I divide it by 5, average 1 year is 13.22. So now this figure has dropped, yeah, because the current right now the performance is not good, yeah, with the war going on. Okay, so if you think that no, I still not all right, then we start from inception, which is I said 11 January 2010. That is like 12 years ago. So 2010, 12 years ago, there are so many things happened for the past 12 years. Pandemic is the latest one, but in between they also have a lot of crisis. And we are still making 144%. So if divided by 12, averagely 1 year is still earning 12%. So this is using the model of I explained just now, with a fund house, with a trustee, and with a pool of fund, and hiring the fund manager, investing in this country. They choose these companies, they choose when to invest, when to profit taking, and this is the performance so far. Okay, so when you buy an investment-linked policy, not only you have the flexibility to choose the insurance you need, you also exposed to these investment options. So this is one of the fund. Okay. So all right. Okay, what you say? Okay, if I invest in unit trust, I agree. It's the same. Basically something I also can get from unit trust. Totally agree. You can get it from unit trust as well. Yeah. So what is the benefit if I were to invest in insurance platform? Yeah. So let's look at if I invest like this with a similar model like unit trust, but in insurance platform. Okay, number one, in insurance, the setup is different because the fund that you see just now, we never have any fund, the fund size go up and then go down one. Unit trust is different. New fund coming, go up. And then after that, go down. Why? Because all the unit trust agent will ask you to, hey, no good or this fund, lang or sell, and then move to another fund. So the fund size will go up and then go down and then like die already, that fund. Nobody play, nobody invest in it. But in insurance, it's different. Insurance, once you buy a plan, every month you contribute money and you're talking about 20 years, 30 years payment. So all our fund is continue growing on. Yeah. One of the biggest fund size is 11.2 billion. This is 1 billion. It's considered one of the smallest. The biggest one is 11.2 that Prudential had to close the fund. Say, okay, now this fund we don't want to accept a deal. We will basically open another one. Yeah. Because the premium will just keep flowing in one, rain or shine, they will just keep flowing in. So how it can help the investor is the fund manager can employ we call it CBA, DCA, dollar cost average investment strategy. So like example right now, it's war, the market drop. I'm not worried. I still have new fund coming in. I can still buy at a cheaper rate. It dropped again. I still have fund. I still can buy at a lower rate. But if I don't have a new fund come in, my costing of the investment is expensive. I cannot buy anymore. Yeah. So this is the advantage for or people like to invest through investment platform. Yeah, because of continued inflow of fund. Yep. Number two, Prudential as a multinationals, basically our sister company under the same group is called East Spring Investment. So you can Google as well. East Spring Investment is located exactly the same. Hong Kong, China, Malaysia, Singapore, same. It's basically sister. So we basically kind of like share the clients and we have assets. East Spring is a unit trust company. So we're able to access a lot of info, a lot of information, a lot of resources from the company. Yeah. So it's like they are investing. So we're like, okay, which one good one? Which one have any special news arrangement? So we're able to leverage on that. And number three, this is the most important one. Financial Services Act 2013. This is a law. Inside this act, there is this clause say that if the nominee means beneficiary. So I buy a policy, I set up a beneficiary. Now, if the nominee, which means the beneficiary, is direct family. Okay, direct family over here is talking about if I'm married, it's talking about my spouse or my children. So if my beneficiary is my spouse or my children, then he or she will become auto trust. So they will become auto trust. That means they become trustee. So once my money become trustee, that money become creditor proof. Yeah. So that means, so we basically have quite some business client. They actually park their fund in insurance platform. So in the event, if I pass away, even I hutang my business, I hutang bank, I hutang income tax, you all cannot touch the money in insurance because the act has protect my fund already. So that is one of the quite an important act that will protect the legacy. Yeah. Okay. The reason for this act is because this Financial Services Act, you have to, they want to protect the insurance money. No, let's say I buy insurance, I buy 1 million. If I die, I want to make sure the 1 million is to take care of my family. It cannot be then my other people also can come after this 1 million. Then how insurance can take care, insurance money can take care of my family? That's why this act is being set up. I mean, this clause is being written to protect the people. But investment link allow people to invest extra fund. That then suddenly this clause become an extra advantage already. Yeah. Okay. And then there's actually another one from the Financial Services Act, which is the trust part. Okay. In insurance, when you set a nominee, so if I pass away, my fund do not need to go through the inheritance process, which means I don't have to go to the courts to apply for grant of probate, and then who is the beneficiary, and then get the court letter, then only I can distribute to the person. Insurance money, straight away it becomes trust, straight away it bypass all the inheritance process. Then the money will go straight to the beneficiary. So it speed up the money. So in a lot of businessmen, when we propose, I use a simple way. I said, your wealth, your asset, your net worth, let's say example, 10 million. So if touch wood, you are not around, how long you think to liquidate the whole thing? and the money really goes to your children or goes to your wife. It will take some time. You're not talking about 100, you're not talking about 100, 200,000, you're talking about million. So is it fair to have, let's say, 2 million to help you to go through the transition period before the 8 million it's being transferred safely into your children's hand? Because in between, they need a lifestyle, they need to spend, and they might need to pay some money in order to liquidate the transfer asset. So I think you should at least have an immediate cash of 2 million, which you don't have to keep cash. You put in insurance. And we use insurance to prepare that 2 million for you. And it's so safe with a trust set up for you. Yeah. So just simple idea like that, they are open. They are like, hey, okay, well, makes sense. So then the next question, how much I have to pay to prepare the 2 million? So it's like you're buying a house. Okay, you buy 2 million, you want to buy a house, 2 million, you want to get a loan. 2 million will probably cost you 12,000 installment. Yeah, will probably cost, and then now interest rate is going up, probably even more. But if over here you paid less than 12,000, I already can prepare you 2 million. Yeah. So this will be a businessman talk at that level of inheritance. So speaking to Darren, I think probably this might be some punchline that can trigger like, macam yes, macam can discuss a bit. Yeah. So this act will be something helpful to you. Yeah. And then another one is PIVM. The government has protect all the bank's money up to 250,000. So one bank, I keep my fixed deposit. I keep 1 million. If the bank bankrupt, bank negara will guarantee give me 250. But the money in insurance, the bank guarantee 500,000, double of the money in the bank. This one I just want to tell you, if you doubt that 稳阵 or not, is it safer? Is insurance safer? I tell you, they are double safer than the bank, because insurance only take money only. They don't give out for loan one. So what is the chance that the insurance company will bankrupt? They only take premium. And then pandemic, they say exclusion. So safe. So insurance is always safe. Yeah. And the bank negara, when you want to issue a policy, they ask for deposit. So they make sure that your company is perfectly safe and perfectly sound one. Yeah. So that's why this PIVM can guarantee double of the money in your bank. Yeah. So over here, I just want to tell it's super safe, safer than safe, and the act is protect you not only now, protect even the distribution part, even the life after when you're not around. Yeah. So that will be the additional advantage when you invest through insurance platform. Yeah. Okay. So a short investments of this investment link. Okay. So yeah, Darren, any questions from you? Yeah.
I think not really much so far. Yeah, you pretty much explained it, and it's similar to what a unit trust is.
Yeah.
So I can see the similarities from that. But from a general standpoint, right? If I just want to say buy a normal life insurance versus a investment link, right? Then what would be the main difference? I mean, in terms of the actual protection, is there any major difference?
Okay. Okay, I try to see. Okay, traditional, or we call that conventional insurance, are normally in package. That means the package is okay. You buy until 20 years, one package, 20 years. Buy 30 years package. So you choose the package. You already calculated with with how many guarantee, how many non-guarantee, how many years is already packaged already, and then you buy. So once you buy already, you cannot change also. So it's rigid for conventional. So they pre-calculated everything. I give you certain percentage for guarantee. So they calculate everything lah. So you buy one set, settle. For investment link, there is no fix. You decide. I want to invest more. I want to invest less. I want to invest this fund. I want to invest that fund. So for the company side, they basically transfer the risk back to the unit holder. You can choose your own risk. You earn your own money. Yeah, you can choose 30 years, 50 years, 40 years. You can change. You have more money, you want to withdraw, you can withdraw back. So for investment link, the major advantage versus conventional is flexibility. It's very, very a la carte. It's very much like AirAsia. I can choose high risk, low risk, more investment, less investment. Yeah. So that's the reason over the years, people love investment link more. They feel like they have a control over their fund. Rather than I buy conventional, I don't know where you invest. You just tell me this only. I think you should give me more lah. Like EPF lah. EPF say 5, then 5, 4, 4. You like, hey, the market's so good lah. This should be 10%, giving only 5. Yeah, you don't know how they count, and you do not and you don't have a choice. It's just fixed already. Yeah. So that will be the main difference for investment link versus conventional. Yeah. Investment link I buy already, and then let's say I buy already. The coverage can go up to age 100, but my premium I opt for the package where the premium only sustain up to 70. Also can. So that means after 70, my premium will jump, but it's okay. I want the setup like that. Also can. But for conventional cannot. You want 100 means your whole premium setup will be 100. Then it will become very expensive. So it don't have that kind of flexibility.
Okay.
Yeah. So investment link is, that means today I want to rent a house from you. I say I want to contract 100 years. If I want, I guarantee can rent until 100 years. But for the Zhoukam, I think I set for 10 years first lah. Then you count for me 10 years, how much? I agree for 10 years. Or you can say, oh, you want to count 15 years or not? Or you want to count 20 years or not? But I want a contract that allow me to go up to 100 years. So they have that kind of flexibility inside the investment link, which also make it complicated that people don't understand. Yeah. Okay. So conventional cannot. You want 100 years, you want my contract 100 years, you have to pay 100 years a rental. Yeah, I don't count 10 years already. I only count 100 years. You want 100 means 100. Yeah. So it's very rigid lah. Yeah.
Okay.
So,
all right.
So unless in your planning, you are very sure. I'm very sure I want 10 years, I want 20 years, I want this for retirement. I want it to be guaranteed. Okay, I on for this. So do we still sell conventional? Yes, sometime. See whether like this conventional would be, people would love, like, oh, now uncertain or inflation or war, not sure what's the economy going to be. Okay, I want conventional. So now people will consider conventional. Yeah, they don't want so much risk. Yeah, yeah, but more rigid lah. Yeah. Yep. All right. Okay, good. Thanks for your questions. Okay, and this is the the last slide before I pass to another person. All right. So let's try this. Yeah. Okay. Okay. I always say in our work, in insurance work, there are only 3 S. We only do 3 work. First S is sourcing. Second S is selling. And third S is servicing. Okay. So if let's say your commissions, if let's say your commission is 100%, let's say the reward that you get is 100%. How many effort is actually contributed by sourcing, selling, and servicing that make up 100%? Yeah, what do you think, Darren? which that means which one needs the most effort from you in generate the business, sourcing, selling, or servicing.
I would say maybe the most time and effort needed probably is in the sourcing portion, maybe.
Yep. Yeah, quite there. 35%. We think our benchmark basically is spent 35% sourcing. Yeah, and actually the lowest selling, only 25% only, is actually the easiest thing to do. And then 40% servicing.
Okay.
Yeah, because every policy, it's not intensity, but because of the long term, it's a little bit, but it's long term of the servicing. So our commission, even though it's 7 years, to me it's more like advance. It cannot be paying you 100 years commission. So you advance the next 20 years effort, all advance and pay you in front in the first 7 years, because the servicing is 20 years. Even though as simple as I want to change credit card, I want an income tax statement, there's still a little servicing here and there. Yeah. Like right now, we are giving customers extension their medical to cover each 100. So we basically connect every one of them and inform them about the changes, and also ask if they want to upgrade. Yeah. So servicing. Okay. So by doing these 3S, what we will do is called review. So after we sourcing, we do review. After we selling, we review. After servicing, we review. Through the review, we're able to generate 3R, which is repeat sales, which is referral, and recruit. So these are the 3 things we get as a reward. So it's 3S and 3R. So that is the job scope, I will say. Yeah. So after the phase 1, we basically will go into the sales process part. Okay. So today is about investment, and then I want to pass to Ammar. Ammar is the current Proventure manager that currently is still in the run, still fresh. So I would want to invite Ammar to share his finding, his experience so far from a background of a non-sales background, IT from a bank, but on the IT side. So let's listen to you. Yep, Ammar. Over to you. Thank you, Ammar. Pass to you. Thank you.
Yeah. Thanks, Kevin. Yeah. Hi, Darren.
Hi.
Hey.
Okay. So just an introduction to for myself lah. My whole career life is in banking. I've been in banking for many years lah. Starting from Maybank and HSBC. And then the latest one was RHB. So I was since joining Maybank, actually since starting of my career, I was a product manager. So in Maybank, I was a product manager in retail business. In HSBC and also RHB, I was a product manager for cash management. So from retail, and then I moved to corporate and SME. So in RHB, basically, my last project was Do It Now QR, if you know lah. Yeah. But not the Do It Now QR for retail one, not for consumer, but it's for business. Where, for example, you go to Chatime ke, where you go to whichever retail shop, you can see the Do It Now QR. So I was the one that managing it. So basically, I don't have any experience in insurance. That number one. Obviously, I don't know about what is insurance all about. Number two, that I don't have any solid sales experience. I do sales support where I help my sales team to go meet the client and to make them understand about the product. So when I see client, it's more on product based. Yeah, but the problem is I don't see my growth in corporate. I moved to, first I was in Maybank, the largest bank in Malaysia. Then I moved to HSBC, one of the biggest bank in the world. And then fine, I moved to RHB. I was invited basically to join RHB to help them. But yeah, my last moment in RHB, basically I just cannot see my future anymore. So basically I had this is basically my experience. So I had a moment, I sit down and I ask myself, okay, I've been doing this, I know that in RHB, especially in cash management, especially in product, and especially in new product, Do It Now QR, I was important. Okay, so I was asking myself, am I happy? Definitely no. That's why I have all the all these thoughts lah. And then I asked myself, okay, what's next? Where can I go next? Do I go to corporate? Okay, so if let's say I go to corporate, and then currently I can share with you, like currently the market price is, if you jump, it's 20% increment. Yeah, so previously it was like 30, and years back it was 40%.
Wow.
Yeah.
So good market rate. Okay.
Yeah, correct. So now market rate is only 20% if you move up, if you jump. So my salary, and then okay lah, I start to calculate lah. Okay, fine. I jump, and then 20%, and then okay, I get this much of salary. And then obviously you don't want to stay for 1 year only, right? So at least you want to stay 3 years, 4 years. So during your second year, third year, your increment will be like 3% yearly increment. So I start to calculate. And then by the time I'll calculate until I retire, so until that age. So I was considering okay, by that age, I only get this much of salary versus my versus our living cost. And then I start to consider cannot this one totally cannot. Okay, so what's next? Okay I'm trying to find something I try to search, and then suddenly Kevin approached me. Okay, Kevin approached me, and then it's about insurance. Okay, fine, insurance. I told Kevin, I am looking for new life, for new career life. I am not looking into corporate actually, because financially I've already calculated that much. Okay, that one financial lah. And then my career performance, career life, it's going to be the same. Corporate to corporate, it's going to be the same. You're facing the same thing. So I don't want that anymore. And in fact, Kevin asked me before, what do you want actually? And then I said to Kevin, I like to give solution. I like to give solution to customers. I don't want to sell, but I like to give solution. I believe in relationship management. So Kevin basically told me about the business. So when he told me about the business, how he managed the business, how he managed the agency, how he create the system in this agency, then I realized actually this is the one. Actually, this is the one. I want to join this team. I want to join this insurance and this agency. Okay, so basically, it's not that I didn't know about insurance. You know, we all know that there are lots of agency, there are lots of agents in the market right now. No, in fact, I wanted to try way before, no, and but I didn't want it. I didn't join because how they work, how they present themselves, basically it's not me. It doesn't align with my objective. No? Because my objective always, I like to give solution. I don't know lah, maybe I was a product guy. So, you know, we always think about solution. We always study about people, study about the market. So when Kevin approached me, yeah, hey, this is the one lah actually. So I decided, okay, I want to join. And Kevin also said that because I still had this corporate thinking where I have salary, you know, but Kevin changed my mind. He always trying to set, hey Ammar, you're not in corporate anymore. You're doing business. You need to change your mindset. Yeah. So until today, he do that. So how to build business is basically, I got the points from Kevin. Okay. So when I joined, it's a PVM program. It's a Pro Venture Manager program. Okay. I believe Kevin have shared with you lah, you know, the triangle thing. So that's where I got, I feel safe. Okay. So basically, yeah, basically I had to sit down again lah. I asked myself, is this the one? Is this my next thing? So I strictly asked myself, why not? Okay. So what's not there? So I asked lah, okay, so now there's bridging income. Okay, so I got that bridging income plus commission. But what you need to do is you need to achieve your target and then you get the bridging income lah. But okay, so I need to achieve my monthly target to get bridging income. So how am I going to do this? You got, for me now, I get two support. Number one, I get from the Prudential itself. You know, every day we have class. They monitor us. And then second, I have Kevin. I have the agency to help me. So what more can I ask? You know, I got help from Prudential. I got help from Kevin. So what more? You know, what you need to do, what I need to do is I just need to follow. I just need to understand the business, and yeah, I just need to do it. That's it. In the end, all angle is monitored by Prudential and also Kevin.
Maybe I will be curious to want to know it. So what is the finding when you really go out? How you find yourself different then?
Okay, so
because there are other agents there. So what is the difference in you? Yeah.
Okay. Again, in general, I like to give solution. You know, I totally understand. In the market right now, there are lots of agents, and the problem that I see is because that all these agents, they just, it's like touch and go. They just sell. And then that's it, bye-bye. They sell, and then the customers sign up, and then that's it, bye-bye. Okay, so to me, I see that as a problem lah. I know, and in fact, that's the perception they are creating in the market right now, or way before. So even now also, so when I joined, I don't want to, definitely I want to change that. I want to go to market, to people. I want to show a new perception. That's my objective. My perception is basically, I want to give solution for you, and I want to manage you.
So how do you deliver that new experience or new perceptions? How you deliver to them?
So
because
that's
sometimes
when
we know lah, you know, sometimes, yeah, I know lah, but then as a customer, I would still think like that you're just coming for sales. Right? So what do you do to let them have that experience?
yeah, so basically I engage them. That's one. Number two, I will try to understand them. I will try to understand their experience. I will try to understand their situation, and I will try to understand their objective. What's their goal, and how can I help to for them to achieve their goal? Yeah.
Yeah, Darren, any questions you want to ask? Since Ammar is he's still in the program right now. Any questions from you that you want to check with him?
Okay, so Ammar, what is your biggest challenge day to day when you're actually preparing to go out to meet your clients? You know, what will be the biggest challenge?
Okay, my biggest challenge, my biggest challenge is saying hello to them.
Okay.
Why? Why?
Yeah.
Basically introduction. Why?
Oh.
Like I said, when they know that you are in insurance, then they will be scared of you. Why? It's because of this bad perception previous agents or those kind of agents have created. You know? We all know that lah. We all know that. So to break that wall, it's not easy. I tell you, it's not easy. But when you show care, then they will be comfortable. Yeah, so that is my biggest challenge. In fact, until today, when they know with that wall, you just need to break that wall. That's it.
I see. Okay. Interesting. Yeah, I can imagine that would be the one big challenge also.
Yeah, but with I can tell you lah. There's ways to do it. There's system to do it, and this system is basically created by Kevin.
Okay, good to know.
Yep. All right. Yeah. Okay. Any advice for someone before on board? What would you? I mean, if you can try to imagine yourself.
Yeah.
Before on board, what you have done right that let you have that smooth sail and smooth sailing and kick off your sales high at the first few months. You just go in and bang and basically Ammar already settled 6-month targets. It's like way ahead already. So that's why he is comfortable, you know, not like I have to chase sales. So what are the things you see yourself has done right before the intake?
Yeah, well, I can share with you, Darren, before I joined, I think, during this pre-onboarding thing, I was very curious. I want to do this, I know, because I don't want to go corporate anymore. I want to do this. That's I already know lah. But I have this big worry, you know, because I don't know what's going on in future. I don't know whether I can make it or not. I know that, Kevin is there, you know, Prudential is there, but I'm not sure whether, can I do it? Or do it is one thing. Can I be success in this business? You know,
so what have you done or what have you prepared that they're able to kickstart well?
Okay, so basically that I had this moment where I just say to myself, you cannot worry too much. Why? Because there are lots of PVMs already success, really. Really. So I know that. So for me, I think that if they can do it, why I cannot do it? Again, go back to the system, you know, the triangle system. I got 2 support. I got Kevin on my side. I got Prudential on my side. What support? What kind of support are the support that I need? I get all the support, I just need to do it. So my strategy is during the pre-onboarding, have an open mind. That's it. Have an open mind, have an open heart. You just cannot worry too much lah. Basically, I know you're worried probably lah, because I was really worried lah, but I cannot.
I'm
worry
also
all the
worried.
time.
I'm also worried.
Yeah, I totally understand. I was on your shoe previously.
Yeah.
So yeah, just have an open heart, have an open mind. That's it.
Yeah, Ammar is very much worried because he really technically have a zero personal sales experience. I think it's like 1 or 2 weeks before the intake, he's still calling me and like, hey, you really think I'm ready? How would you rate me? If, what is the chances you think I'm going to make it? I'm really scared.
Yeah, correct. I even WhatsApp Kevin personally. Hey, Kevin, you think I'm okay? You think I'm good enough? Yeah, I remember that. I was that worried.
Yeah. Okay. So okay. Open mind, open heart. Okay, that is what's your advice. Okay. Yeah. Okay. Any more questions, Darren?
As of right now, I can't really think of any exact or particular question to ask, but okay, it's good to know this Ammar, Kevin, Prudential Aaron is there to support in case anything happens, or if let's say if I'm unable to to find a good script to talk to these new customers, or if I need to find a new source, then maybe I can come back to the agency or to Kevin or to Prudential to ask for assistance. Then I can actually go and again farm these potential clients. No problem on that.
Yeah,
so I'll keep an open heart and open mind as well as what Ammar has mentioned to me. I think it's very true.
Yeah, no problem. Yeah, we basically meet every week lah. So especially for Ammar with no personal sales experience, I basically go through with him her message, her script, word by words, tune even words by words. Yeah. Yeah. So okay, no problem. So that's we wrap up our phase 1, which is the fundamental initial understanding of insurance. So now I hope by now after 4 classes you actually look at insurance differently. Even today, if your friends were to talk insurance to you, you are already at a different positions that that you have a different understanding, that you're able to tune them to look at insurance differently. Yeah. So phase 2, next Tuesday onward, we will start to talk about sales process. Then we will talk about what Ammar mentioned about relationship management, about the systems, how we break that ice. So we will basically go into that in that another 4 classes. Yeah.
Okay. All right.
All right. So okay, thank you very much. Yeah. 10 o'clock sharp. Good. So,
okay. Thank you so much for the sharing, Ammar and Kevin. Ken.
Thank you. Yeah. Have a good weekend.
You too. Bye. Bye, guys.
Thanks. Bye.
All right.